RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich.
Hello everybody, welcome back to another exciting episode of The Rational Investor. This is Julian here, reporting in from the dystopian future, small. We're only going to leave it up there for a second. I'm actually going to even stop it right now. I just thought, I always have it up. We'll just get rid of it. All right, we've got the more important information that you guys are interested in. Hello everybody. Hello Mr. Ghost. The more people that interact, the more people that get attention. Let me know if there is an issue with the stream. So anybody that's joining late, let me know if there's a buffering issue, because I know on Brian's shows we had some issues with buffering. I think we fixed it, but if there is still some issues, please mention it, and then we'll look into, is there still some kind of issue happening or what's going on, and see how we can improve it, because obviously we don't want any kind of streaming issues. Okay, so lots of crazy stuff happened. The market is only being held up right now by NVDA, which is only being held up by artificial intelligence hype, while the CEO of NVIDIA is doing what? Let's look at insider selling. NVIDIA. Let's talk about NVIDIA. Insider activity, NVIDIA Corporation. What is happening? NASDAQ. What is the CEO doing? Number of open market buys, 10. 12 in the last 12 months. Number of sells, 14. Total insider trades, 24. So the director sold on the 30th. Officer had an automatic sell apparently on the 18th. We see a lot of there's some acquisitions, non-open market, disposition, automatic sell. Let me see if we get a better view here, maybe on Yahoo. I saw a very interesting post before about the CEO selling a lot. Direct sale, 220, 305. It'll be very interesting to see coming out like in a week or so what kind of sales are happening. But we can see there's a lot of sales and then just some stock awards that come out, but mostly sale. They're all selling. So something interesting to keep in mind, that there's a lot of people selling NVIDIA. Something else is if you look at the options, finviz.com, better reporting. Okay, so let's do Finviz. Thank you, Brian. Or Chris, whoever's on the RationalInvestor.com account. NVIDIA. I want to look at the options. I want to show you guys the options with NVIDIA. This is really crazy. I've never seen something like this. Scroll down. Where is our insider trading, income statements? Yeah, here we go. So May 18th sale, mostly sales. So you can see here's the president exercising options, and just a lot of sales. So these are all the sales back in January, though. I think we're going to get a trickle of sales that'll come in shortly. I'm very curious to see what happens with that. The other thing is the options market. I wonder where I can look at options. Where's the best spot that I want to look at options? Options, NVIDIA. Okay, options chain. Let's just look on NASDAQ. And let's see if it shows the percentage. I mostly use my trading account, but I don't want to pull that up. So let's see. Date, May 2023. Options, calls and puts, near the money. Okay, that's what we want. 26th. So if we look here, plus 36 point. It doesn't show percentage. I wanted to show the percentage. And I wanted to show like 400. Let's see. Now let's go a little bit out of the money. 390. So why is it showing like this? Let's see. 390. What happened with these calls? No percentage shown, but let's see if we can. Okay, so previous close. So previous close was 7 cents. Okay, and the daily high was 13. Currently, it seems like it's around 5. It says high 13, but currently 5. So you could have bought this yesterday, apparently, for 7. I don't think there's much volume on these though. Where's the volume? Oh, volume, there's a lot. 37,000. Wow, look at that. So currently it says 553. Oh, change this to a 5-day. Yeah, 553. But you could have bought it yesterday for 7 cents. So 553 divided by 0.07. 8,000% return on a 390 call. It's just insane. It's just like I just wanted to point this out and show you guys. I've never seen this kind of insane option returns. So I guess, you know, the move was not necessarily priced in. Normally these things are priced in. They're almost only at a certain move that the stock makes, the upside or the downside, and it's already priced in beforehand, such that because there's an IV spike before the earnings, because there's a volatile move expected, so that makes the options more expensive, the move ends up almost perfectly matching the actual move of the option, such that when after the move happens, the IV drops so much that even if you're right, you don't make a lot of money on the option call or put because of the IV change. But the fact that this happened means that the market did not expect this kind of massive movement in NVIDIA. So just a little bit of a education on how option pricing sometimes works when it comes to earning reports, and why actually TRI as a whole does not recommend playing earnings. It's usually a losing game. The only way you can really play it is from certain in the money option trades where IV is not affecting you too much. Out of the money, normally you get screwed. But in this case, if you took something way out of the money and went for the, oh, NVIDIA is going to jump 20%. Okay, if you bought a call there, you made insane amounts of money. So something I just wanted to talk about, share. NVIDIA is moving the market today, something everybody's talking about. So I thought it's important I touch on it. We will pull up the chart in a minute. I thought really quickly I would look at I always show this every week, the AAI sentiment survey. AAI stands for American Association of Individual Investors. So you can see our bullish percent jumped big time, 5% up. We've got still a neutral at 32, but the bearish number continues to, it's the same as last week, but it continues to be lower than where it was in the past. I want to get down to this 30%. I really want to get us down to that 30% before we have like a huge drop. I'm a little bit disappointed to see this hovering where it is, because it hurts my bearish case. Okay, hello person named Mama. If you guys have any questions, feel free to ask. I'll try to answer as we go. We've got about 30 minutes before then we jump over to the after party for TRI members. But for the next 30 minutes, you guys have got me and you can ask anything you want. Okay, so let's look at open interest really quick before we go talk about NVIDIA. So tomorrow, max pain is around 415, between 412 and I would say 420. So that's 4,200 and 4,120 on the SPX. So we'll look at that and see what's more likely going into tomorrow. Let's look at the dashboard really quick. Sharp downturn on the S&P. Crypto top 30 actually crossed over today. I don't know how much longer we're going to be showing this dashboard because it's extremely valuable, and a lot of people pay good money to access this. The tool is working very, very well. We will likely update our performance report soon. It continues to generate returns far exceeding the indexes themselves and just holding Bitcoin or S&P 500. So interesting to see the breath really turn around the S&P here. It's very, very interesting to see. So we might even go bearish soon after a very brief bull move. Have to keep an eye on that. It does update daily. Okay, so that's breath. That was the max pain. Let's see about news events here. So we have preliminary GDP that came out at 7:30 my time. Unemployment claims. Unemployment claims are still really doing extremely well. Extremely well. Well, keep in mind, Mr. Coke, the crypto breath taking a long time to break is because it's on a daily chart, right? So crypto moves very fast, and the breath is better at following a trend. And when the trend is unsure, the breath's going to oscillate and take a while to decide a direction. So it's not nothing is 100% perfect, but I think the performance speaks for itself if you look at the backtesting data that we have. Okay, so hopefully that makes sense. Anyway, unemployment claims. So a big thing is unemployment claims. We really have to watch that because the economy, the market is not going to truly break and the economy is not truly weak, I think, until unemployment claims start spiking. When unemployment spikes, that's when you know there's a problem because finally, okay, companies are cutting employees because they have to. That's usually the last thing they do. They cut everything else first, and then they will cut employees at the end, and that's when it's a big issue. So unemployment did spike May 11th, but then this week it's lower, 240, kind of in line from forecast expectations. And we're kind of just oscillating. There's not been any huge spike. I want to see a huge spike. You can see here there's a slight uptick, but nothing huge. I mean, it's been the same since, this is, if we go back, let's go back. Let's see where were unemployment claims before? Like, for example, when COVID happened. Look at COVID, right? Look at this spike. Massive layoffs. And that's when the market, like if we go to March 26, 2020 in the market, what was happening? All right, so let's go to a daily chart. March 26, 2020. Okay, right here, right? So here's February, COVID, and then March is right here, right? All right, boom, dump. Okay, and we actually started rallying because we had the Fed injection, right? So if we go back, March 26, 2020 was when it finally hit. Okay, we have to start firing employees, but they started probably thinking about firing here, right? And that's when the market was already dumping. I think COVID was a unique situation. We can go back to 2008, right? So here's 2008. So here's when unemployment started really spiking and ending up above the forecast, continually above the forecast. You see how here it's in line and just oscillating, but then around October 2007, we started going continually above the forecast. Then we came below a bit. And then in 2008, February, that's when we kept spiking above forecast. So let's go back to 2008, right? Let's see what happened here with the S&P. Maybe I'll go to like a 3-day chart. Look at how this market just goes up. It doesn't really go down. It's kind of fun to look back and see how it basically doesn't go down at all. That's interesting. The data, I don't really get any data before. I have to see if I can get a different. Can I get more data? Why does it all stop? Just do the S&P, SPY. Okay, 2008, right? So here's the dump. This is when the big, we started heading lower in May. Actually, the first rundown was in 2007. Then we had a bump. May 08 is kind of when I would say things started. So if we go back here, right? So here's May. We started spiking in February 2008. And March, April, May, and we just keep going. And then things really take off in July. So what happened? How does that line up? May, April, June, right here. July, things take off. And then finally we roll over in August and September. And you can see here's August, big spikes, huge spikes in August. Continues spiking September, October, November, January, February. Gets really bad January, February. So the lows so March was the low, 2009. So that was when the firing was at the maximum level. So when this starts rolling back over and unemployment starts going under the forecast, that's when we know, okay, that's the bottom. You can it's not perfectly tracked on the downside, but certainly when it starts reversing on the upside, that's generally the bottoming area and companies start hiring people back and stop firing. So it's something to keep in mind. Okay, Brian, that's great to hear. Thank you for telling me that. Coke, I think it's not easy. I think it's a difficult market because you have to keep in mind, right? So these are the markets, right? So this is a weekly chart. So here's been the markets the past like 2008 till basically, you know, now. The only time we really had a dump was there was like a baby one in 2018. We had the COVID dump, right? And then since then, it's like nothing, right? It was just like up. It's up only. All you got to do is long stuff. That's all you do. Long, 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 and eventually it goes up, right? It all goes up. Look at this chart. It's just up only from 2009 to 2020 for 11 years. There was almost no downturn. It was, and if there was, it was very small, not huge. So you just long only. As long as you went long, you were fine. It was just the COVID crash that cut the market not even in half. It was that's like the Fed was constantly injecting money, right, with quantitative easing. So you just knew, okay, go long. Okay, go long. And they did the same here, 2021, 2020, and the market just went up because money's getting injected in the system. It's all about liquidity. Well, now liquidity is being taken out of the system. Okay, money is not being put in the system. So if there is not free money being put in the system, where do people that are trading get money from? Because before, you know, in a way, partially people were getting money from the injections of liquidity, right? They were extracting money from the market just by stocks going up. Everything's going up. But now nothing's being injected. Where are they getting money from? From other people, exactly. And that's why we see these violent moves. This is not, obviously, this is not easy. Does this trading right here for the past, since 2021, look anything like what we've seen the past, like literally 11 years and even here before, right? Does this even look remotely the same? Look at these. It's just straight up. And then if it goes down, it's kind of just straight down, right? In all of the 21st century, we've never seen something like this. It's totally different. This is a completely foreign territory, I would say. So yeah, it is hard, especially if you've been trading just the past 20 years, because this is an environment that I don't think you're used to. I'm going to turn off some stuff here to make this chart a little bit clearer for you guys. We're going to go back a little bit further. How far back can I go with this? I can only go this far back. I would really like more data. This is ARCA. Is there anything with more data? I mean, I guess we can look at like the Dow Jones. Maybe I can get something like more. Yeah, it's different this time. So this is the Dow Jones, right? I mean, if we look here, the only place where I could say it's sort of similar is maybe here, maybe right here a bit, but it's more extended. Even here is not that different. I would say the Dow is more similar, but this is looking very toppy on the Dow. Wouldn't you guys say? Look at this M here. It's not confirmed, of course, and it could turn into a W and do that, but I really doubt it. It doesn't look great. We'd have to look at divergence, but to me, this is saying this with a downside target of 22,000. 2000 was definitely similar, right, to this, but the oscillations were much, much smaller. Look at how small it is compared to, let me put it on a log scale. Yeah, so on a log scale, I would say it's similar, right? So at least in the Dow Jones, 2000 is very similar to now. And even 2008 was a bit similar, topping pattern, right? So you have the initial dump, and then you have a rally, and then you have the real dump. Same thing here in 2008, dump, rally, real dump. So what percentage did the market rally, at least the Dow Jones, after the initial big dump? And how much did it recover? So let's take the top to bottom. Okay, and what was the recovery period? I know this is like not my normal spiel, but I thought this is important. I think a lot of people are looking at kind of macro environments and what happened in the past to try to determine the future. So there was a retracement to the 78.6 level in 2000. Let's see what happened here in 2008. Okay. So there, initial dump, bounce, and retracement. And if I take this one, we came up a bit around the 61.8. Didn't get to the 78.6 level, around 61.8 level. And then we had the real dump. And then let's see what happens. Here we never got the real dump, right? We did get a retracement again to that 78.6, 88 level, a little bit over the 61.8, and then we fell back over, and then we put in the divergence and we rallied again. This head higher. Okay, so you can see, you can kind of see a bit of a pattern, right? There's a bit of a pattern. Here we didn't get that pattern at all. It just dumped and then rallied and took everything out and then dumped again. So slightly different that time. This one, it does seem like we had our top and then we had our initial dump. And then where have we retraced to? 61.8, right? We almost tagged 78.6. So we did go up, we went up to the zone that we needed to get to where it's the general reversal level. Oh, 1075 is here. We need to have you back on at some point, Mr. 1075. Vanya, I appreciate the question. I will answer specific stock questions in the after party. That's where I go through any questions that you have related to crypto stocks, anything like that. So yeah, it's funny. I keep positions on. So this is interesting to pay attention to, that we didn't surpass this 78.6. We came up and tagged it, and now we're kind of, it looks like we're putting in this bit of reversal, and we could head lower. The question is, where do we go to? If you look at previous dumps, so for example, this COVID low, right? We have the COVID dump, and then we have this dump. So did we go to a 4.669 chaos level? Like if this is my M top right up here, right? Where did we end up? So you see we did end up at basically this chaos level was a major level. What if we go a little bit lower and look at this secondary rally and move? So you can see the bottom was basically this chaos level, right? Amazing how that works out. It's kind of crazy. Let's see if it works again. I'm not guaranteeing that this method works at all. It's just a way of looking at things. In this case, you can see we didn't even get close to the 4.669 level, at least how I normally draw it. There's another way to draw it where you, let me see, I just look at the consolidation areas. Yeah, so I would have to do something like this, where this is the 2.68, this is a 1.618, and then we tag it at 4.669. But that's me like knowing ahead of time what might happen. So I don't really trust that. The point is that sometimes it works, sometimes it doesn't. It's always interesting to look as a potential like long range target. Wow, look at the market. Look at the market from the 1980s to 2000. This is crazy. The Dow Jones, literally all you had to do, how much did your money go up? By just owning Dow Jones stocks. Like how easy did my parents basically have it? I'm just looking at for my parents. 1,300%. 1,300%. And how much has it gone up now since 2000? If you bought maybe at this level, at like an average level, you only returned 250%. Fascinating to see. Wow. Okay. So good to know that, as I suspected, my parents had it pretty easy in a way. They of course didn't have smartphones, but the market went up a lot. Let's go back to let's look at the NASDAQ really quick, just to see what the performance has been from the NASDAQ. I bet the NASDAQ's gone up a lot more than the Dow Jones since 2000. So let's see if you bought somewhere in this mid-range, right? And you went all the way up to the highs. So yeah, the NASDAQ returned 1,000%. Of course, this was the technology stage. I think my camera paused. Yeah. So I think my camera paused. Can you guys, I'm not moving. Let me see something. So my chart's moving, everything's moving, but my camera's not. All right, hold on one second. Uh-oh. Hopefully you can still hear my audio. What happened to my face? Hello, hello. Testing, testing. Okay, let me try something. Properties. Okay, I think we're good now. Should be working again. Let me press OK. All right, so I think I'm working. Yes, it's working. Hello. All right, I'm back. Sorry about that. All right, if you really want to look at the real market divided by M2, yes, we have looked at it divided by M2 before. Let's do this one divided by M2, and then we'll look at the S&P divided by M2. And maybe that's a good name for this video. How much has the market really moved in the past 20 years if we account for money supply? Yeah. So, I mean, compared to, there has been a move, at least in the NASDAQ, right? So you did get in real returns compared to the amount of money that's been created. Let's look at a price range. You did get a solid 400% return. But if we look at it compared to the Dow Jones, I think you're screwed. Right, so yeah, you're basically nothing has happened. You're actually down from 2000 on the Dow Jones, right? You didn't make anything. The only time you actually made money was from 1980 to 2000. If we look at the S&P, which I think is a bit more of a fair assessment of the economy, because it has a basket of both, you're still down from 2000. That's fascinating. We've done nothing, and we've just sat going sideways. So something interesting to see and very sad. Very, very sad. Okay, so fun data. Let's look at the market now, talk about what's going to happen. We'll take a look at Bitcoin, and then I'll call it a day, and we'll go to the after party. Okay, S&P 500. Let me pull up I want a couple things on here. Okay, TD sequential, trend heuristic. I don't want moon phases right now. Let's go to a 3-day chart. Okay. All right, let's pull up this. You can see the RSI is just sitting at this midpoint. Stochastic RSI is breaking down though. Look at this divergence that came in. We've got divergence on stochastic RSI, but no breakdown on the normal RSI yet. We're sitting at this VIP level, which explains why price has done nothing. This is the most dangerous time to trade the market, when the RSI on these higher time frames is just sitting around the 50% level. It's doing nothing but trying to take your money on both sides. Very, very, very dangerous to trade. Extremely dangerous. And you can see it's difficult. We can go to a 4-hour chart. We can see the obvious breakdown on the SPX and the attempt at recovery. And we're just kind of sitting here at what? 41.45. And where did we say max pain was? Let's go back here to max pain. Max pain is at 41.50. What? Why are we sitting there? Because that's max pain. Let's see where we go tomorrow. Remember, the zone is between 41.20 and 4200. So it would make sense for the market to stay there going into tomorrow, especially with what's happened with NVIDIA. I think with NVIDIA sitting up here, there is probably a lot of people that have taken options on both sides. So it would make sense to them to do nothing into Friday, and then maybe we get a NVIDIA move Monday. We have to fill this huge gap. We're going to have to do it. Okay, the market cap, the PE ratio on this thing is just ridiculous. My plan with NVIDIA, really quick, just to tell you guys, is I'm not going to short this until the 3-day chart breaks down. I was shorting NVIDIA down here. I had some short ideas, and then even up here a little bit. But I think the best strategy after watching this for a while and looking at various different stocks is to wait for this 3-day RSI to break down. Until that happens, I think it's very risky to try to short this. There is a huge gap here, yes, that should be filled. But if you want to play on the safe side and you've already been burned by shorts, probably best to wait for this 3-day chart to break down. And I think going into tomorrow, it's going to do nothing. That will burn option players on both sides. And then Monday, we might get a spike up to this 400 area, knock out any shorts, maybe oscillate there a bit before we finally roll over and head down to 300 or so to fill the gap. That's kind of what I'm seeing. The catalyst will probably be the S&P as well to pull things down. US dollar is really taking off here. Super, super bullish. I really like what I'm seeing with the US dollar. I've been waiting for this move for a while. We actually just did some transfers at TRI that we'd been waiting to do because we wanted to see the US dollar rally. And now we're getting that rally. Look at this huge breakout on the 3-day chart. You can see my arrow from back here in April where I basically said, okay, the DXY should go up at some point. You can even see the divergence between price, right? Here's price. And here's RSI. Boom. Divergence. Very, very nice divergence. Now imagine if this is the W, right? Imagine if we get a confirmed W. Where does chaos point to? This is just ridiculous, I think. Where do we go? Visibility. I need to reverse it. Come on. Yes. Okay. Where does our reversal lead us to? So first stop would be 108, according to extreme chaos levels. Let me try to make it a little bit better. And then the next one would be 112, and our final high would be 121, which would be pretty intense because it would break above my long-term parallel channel trend line. That's a bit almost extreme. I would be very surprised. I think something more accurate would be let me just make this a bit more conservative. Something like 120. Maybe we do something like this. Tag this midpoint, get rejected, push up to this 1.618, get rejected. Do something like this. Then we push up again, get rejected, oscillate in this zone before maybe we finally spike up somewhere later, maybe in 2024. But even then, I find it hard to believe. So it could be we just end up in this zone, 1.618, 2.618. Always a possibility for rejections to happen. But those are general targets that could work. That's what I'm seeing. So something interesting I just wanted to show relating to US dollar. It's really taking off. That's why gold is dumping hard. I'm not going to show the gold chart here. We're going to do it in the after party. But I will take a quick boo at BTC. We'll talk about it really quick. And then I think we'll go into the after party. I see we've got 21 people watching. Yes, thank you guys for tuning in. By the way, I don't know how much longer I'm going to be doing the daily briefs. I might switch over to doing like highly focused 10-minute videos on kind of longer term research rather than shorter term. I'm not sure how you guys feel about that, but it's something we've been talking about a lot at TRI that, you know, I might transition to doing that just because of the time zones for me. So something we might be doing, a little fun update on that. Something similar to what some other channels have done, you know, very professional planned out videos that kind of hit the more macro topics. Okay, so here's Bitcoin. Let's go to a daily. So this is kind of my Bitcoin plan. You can see the red squiggly line. And I daily chart, the daily broke down on RSI. Look at this breakdown, right? That's a confirmed breakdown. We broke down from my uptrend. This was a major uptrend that we broke down. I thought we would consolidate and bounce here. We didn't. And I'm glad that I didn't take any longs in TRI's quite lucrative, quite large portfolio. So I'm glad that we stayed all cash in that since I cut my longs at 30,000. And right now we are still all cash. I can't short from this very big account, so we're not in any shorts, at least from the account that I trade, which I think it's our biggest account maybe. I'm not sure off the top of my head, but I think it is one of our biggest accounts. So just kind of being transparent about our positioning. And this is very bearish on the daily chart. I mean, RSI is not at the 50 level like the S&P. So it's clear that it's in bear mode. We're leaning very bearish. If we look at the lower time frames, people keep talking about the lower time frames. What's happening in the lower time frames? Oh, if we look at a 4-hour, I don't like using these lower time frames. I think there's a lot of fake outs on crypto. But if we look at this lower time frame, it does look like it's trying to stage some type of small reversal. Always potential with these type of things. We can see that if we go back to a daily, I did draw these chaos levels. We did tag this 1.618 based on this. If I go to a 3-day, it's probably more clear. Like this is your, right? This is your M top right here. It's pretty obvious M top, right? With confirmation and breakdown. Finally, we got a breakdown here. This is our breakdown. So with using that as our M top, we hit our first target at 1.618 already. And the next target would be 2.618 at 23,000. And you can see we also have a zone here with major support right in this area, which is around that 2.618. And we can oscillate in this zone for a long time before we have the big rollover, which is down at our 4.669 level. We just take out this low at 19,600, go right below it, maybe drop even a little bit further, 19,000, 18,900. And then we quickly do almost a V bottom from there and just take off. I think that is the scenario that makes the most sense. I don't know if it's going to happen this quickly. I think this time frame could be off. I think it really depends on the macro environment and what's going on with the S&P, US dollar, things like that. But I wanted to point out very clearly that this large parallel channel has broken down. And it looks like to me this M top has confirmed. So things are not looking great for Bitcoin, and I would be very cautious with longs. But I've been saying that since 2930K. Okay, so that's the public show. I have a bunch of stuff I want to talk about, but I'm already at 36 minutes. So I think we're going to call it a day here, and we will jump into the after party for all TRI members. If you're not a TRI member, feel free to sign up to the free trial. Come on over. If you like it, sign up. If not, well, that's also fine. Okay. I'll see you guys later in the after party for all TRI members and anybody in the public. I will see you next week, probably, most likely. Same time, same bad place. Okay. Bye, guys.